Today I'm going to discuss Florida taxes. Briefly, I'll go over the state income tax, and then we'll dive much deeper into the real estate taxes, which primarily focuses on Florida's Save Our Homes Act, the tax portability portion of it, as well as creditor protection. You may say, well, Gary, Florida state has no income taxes. That's correct, it's zero. But you've got to compare it to other states like California at 13.7, Hawaii, New York, and New Jersey all around 11%, Oregon and Minnesota at approximately 10%. In order to know whether it's beneficial for you to homestead in Florida, you need to take a look at the state in which you're coming from, as well as how much income you're making there to make a true financial decision. Florida has some key creditor protection aspects which are included. So it has unlimited creditor protection against most creditors. Creditors generally cannot claim against a Florida homestead in cases like lawsuits. The exceptions would be Uncle Sam with taxes, or the local city government with assessments, your mortgage company, or anyone that's done improvements within your home. Those three have to be paid. But there's no dollar cap on this homestead exemption from creditors, but there are some unusual things. These protection acts only apply if your home is on less than half an acre within a municipality or less than 160 acres outside of a municipality. In 1992, Florida passed its Save Our Homes Act, which goal was to make ownership more affordable, to protect the homeowners from rapidly increasing taxes. In the statute, it says the assessed value, that's in bold and underlined, can only increase 3% a year, or the cost of the CPI, whichever is less. There are some exceptions, some of the non-ad valorem services like fire and waste assessments, to name a few. It also protected properties that were not homesteaded, as it limited their tax increase to 10% again of their assessed value. Also, some exceptions apply there as well. In 2008, Florida added its tax portability to the Save Our Homes Act, which made it more affordable for homeowners to change their primary residence so they could sell and move elsewhere. The cap on this is $500,000. Quick example would be if you had $500,000 of tax portability and you bought a home for $1,500,000, you'd be paying taxes at the rate of a home equivalent to about $1 million. So in summary, some of the advantages of homesteading in Florida are the homestead exemption of $50,000, which saves you approximately $750 a year. Tax portability up to $500,000. At $500,000, that would save you $8,100 a year. Again, we have no state income tax. If you were coming from a state that had 10% state income tax and you earned $300,000 there, you would save roughly $30,000 here. If it was $500,000, you were making $500,000 there, it would save you roughly $50,000 here. So make sure you understand what your state income taxes is in the state you're moving to Florida from. This next segment, even though it relates to Tarpon Landings, would apply to anybody within Lee County, Florida. I have a step-by-step guideline that will give you directions on where to find all of your tax information. So if you want that, give me a call or shoot me an email. My email's located at the bottom here. In the previous slide, if you hit View Comps, this is what you'll come to. These are the actual comps for my unit 6021 Silver King, unit number 501 at Davenport. So at the bottom of this in the blue, it's got the value for my condo as being $1,248,540. And was based upon these three condos here at the bottom in green. They don't give you the unit number, but at the top you see the red circle there. That's the property ID number. You can put that in the website and pull it up and see what the unit number is for that. So on this slide you can see at the top the market values in circle. Last year my market value of my condo was $712,760. It went up over 500,000 to 1,248,540 based upon those comps on the previous page. So how do they get the portability? Down at the bottom, they take your last year's assessed value. Since the CPI was above 3%, this number can only increase by 3%. So they multiply that 521K times 3%, it comes out to $537,281. So if that's what they're assessing at, and my market value is $1,248,540, if we subtract the $537,000 for that, we get my portability as $711,259. But remember, you max out at $500,000 of tax portability. Since the tax bills are sent out to you in August, they're basically looking at the previous year's sales average in order to figure out what your taxes will be for the coming year. So as we looked and we saw, my unit is valued at $1,248,000. If we looked at last year's sales in 2022, you see the average sale on Tarpon was $1,238,000. So that's pretty close. The year before that, in 2022, where I was valued at $712,760, the average price here was $762,091. So we had a huge increase from the sales of 2021 to 2022, 62.5%. Also, take a look. So our average in 2023 here at Tarpon was $1,646,429, a gain of 33%. So that's what they'll be looking at when they come out with 2024. So it looks like we are going to have another increase in taxes. Now let's take a look at an example of someone who's homesteaded. This is actually my unit. Down here in blue, you see there's a 3% increase from the assessed value in 2022 to 2023. My assessed value went from $521,000 to about $537,000. So if you take that $537 and you subtract that out from the up top right here where I've got A, from the market value, it gives you my portability. And remember, my portability is $711,259, but it does max out at $500,000. But this is an example of homesteading. Here's the second slide in our homesteaded example. So in this particular example, you can see that the exemptions being homesteaded get $50,000 on every line item except for the tool school items. There's only a $25,000 deduction there. So you can see they take the millage rate times the taxable amount to get the amount that you paid over here. The bottom lines that definitely do not include in your 3% max are these non-ad valorem assessments here. One is for fire service and the other one is waste assessment. Now we're going to take a look at somebody that was not homesteaded, where the maximum increase is 10%. So you see down here in blue, last year the assessed value was $573. This year is roughly $630, but yet his market value is $1,171,436. But the difference between those numbers is what they call the assessment limitation benefit. Here around the B, you see there's $541,140 that he's not having to pay taxes on. So that 10% limit really helps him. This is kind of an unusual situation. If he were to change and go to homestead now, that homestead number would be setting off of the top market value. So when he first homesteads, he actually may be paying more money than he would if he doesn't homestead. So it's a little tricky in this fast market where the prices are moving up quickly. Okay, here's the tax bill for the last example we gave where they were not homesteaded. So you see there's no exemptions here. So the 50 and 25,000 we saw in these others where they were subtracting out, there's no benefit of that. Also, you can see here that he had to pay the fire assessment as well. We did determine that the fire assessments seem to be aligned by what model unit you have here. So everyone that had a Davenport was paying the same price. Bonairs and Amelia, same thing there as well. If you're wanting to protest your bill, here is the Value Adjustment Board's information. They claim that you should only protest during the first month when the trim comes out in the August-September time frame. Just as an FYI for those living in Tarpon, I printed out the sales for 2023. It's interesting to note here in the 6 out of the 7 units that were sold last year, they were the end units, the Davenports, the 0106. Lastly, I printed out the 2022 sales. It's kind of unique here in that most all of these were the interior units, the Amelias and Bonairs, and there were only a couple of Davenports in 2022 with all of these sales. Well, I hope you found this beneficial. If you have any questions, don't forget to contact me. This is Gary Giannone. Have a great day. As the pink stork is fading off into the sunset, I need you to do 2 things for yourselves. First of all, make sure to subscribe below to my YouTube video channel so you get all the important real estate videos for Southwest Florida. You can also sign up for my Living the Salt Life monthly magazine, which will give you a lot of great hints on buying and selling real estate here in Southwest Florida. You know what to do. There's the QR code. Take your camera, do the click, sign up. I'll be glad to help you in any way I can. Hi, I'm Gary Giannone. Come grab your slice of paradise and enjoy the salt life. Give me a call today. Area code 239-900-7373. Have an awesome day.